We shall paper read this for now. I expect higher prices actually, and if that's going to be the case, I expect this low to remain in place. I want to see price move back above and break this high. If I get that, then this will become an inversion fair value gap. Just like this motherfucker here. Just look at this beauty. Price hit it, dropped down faster. This is a confluence of two things. Number one is this wick, consequent encroachment. Number two is this 5-minute inversion fair value gap. So after 1010, we may get an entry here, long, going back up to revisit the opening range gap. What a trick. What a trick. So I'm beginning to wonder how to actually trade this inversion fair value gap, because um, over here, if you sold it, hoping for it to go down, this would have killed you. And when it came back here, you buy. This move is too strong, it'll blow your account. Shoots lower. So, and then this one comes back up. Will it become a reclaimed fair value gap? Apparently not. Now it comes back down again. Is gonna act as inversion? No. It said no right there. So it broke lower, seeking this fair value gap. So what I'm thinking is we might need to wait for it to get a clear market structure below it before using it as support. Because if the market, so right now this is a short-term, yes, a short-term low, and this one is a long-term low, right? So it is likely to give us this is a bullish market structure, but it hasn't broken above this high yet. So that's where I have all my attention. The reason why this structure will form here is that we tapped into previous day PM session lows. So that's why I'm expecting bullish prices. Because if you are bearish, if you're bullish, again, the market is very bullish on the daily chart. What you want is to be buying below previous day PM session lows. So this is this sell side liquidity here that we could know that it is a target. So that target has been fulfilled here, and now the market is going up. So let's wait and see what happens when we get above this high. That's what I have all my attention is to this high. So let me draw my line segment. I will make it blue. We do not worry. In fact, this here, I'm watching to see if this down candle is going to show characteristics of ICT bullish order block and send prices higher. Also bear in mind that there is a fair value gap here, and there is also another sell side liquidity pool down here. I don't expect price to get to it, but it's something to keep in mind. If this low breaks, then the day is very, very bearish. But for now, I don't really see it going anywhere lower. I don't want to see price break below this. I really expect higher prices, and even though I understand it may go down, uh, I would like to see it go up from here because this liquidity pool right here is pretty good. I would say it is enough, but the market maker can decide otherwise. So now that we've tapped into the liquidity pool, I'm just going to remove that. And put something else here. Use a template. Uh, shorten template. So, all right. So we've had our sell stops taken. That was pretty good. This move from here down to this level is beautiful. And these lines, I'm measuring this wick. Make it a little thicker line. Yeah. So 10, 12, and the order block is still holding. You may be wondering what these colors are. This is just me changing the color of the candlesticks here uh, to depict the opening range. I like to study the opening range every day so I can understand how the market behaves at the opening range lows and the opening range highs. Like here yesterday, um, see that? This was opening range high, price came back to it, and then we had that rally. So, um, yeah, I don't really think price should get here today, but if it does, if I get a close below this level, this will become an inversion fair value gap. That's why I noted it like this. It has not become so yet, but it would at some point in the future. And if this becomes an inversion fair value gap with price closing below it, then this this low here would be my target. Remember from yesterday, price has not come back to uh, I guess we got a stop hunt of a low formed after 10 a.m. So this is good. But this low also, if before the market gets where it wants to go, I would like to see this low take up. So we could have a model of uh, like we could be looking for an opportunity here. Should price break through this, then we'll get a close, swing low down here, hit this level here. We can take a short, uh, either using institutional order flow entry draw or using consequent encroachment of this inversion fair value gap, targeting this level down here. So that could be a trade for tomorrow. I mean, some other time. I think it would be useful to just write these numbers down. Like, let me see, coordinates. Yeah, 25 to 25 and 25 to 37. Those are the levels of the fair value gap. Okay, so far it looks like the order block is not uh, showing signs of strength, but and also this fair value gap is still a problem for higher prices. So I don't know. Let me just watch and see. Um, I still expect higher prices. I think we may be dealing with the low of the day here. And I don't want to see price below this low. If we break below this low, it is going to be problematic for the bulls. So if I were bullish, I would really reconsider my position. Like I would take something off to reduce my risk after this candle closed down here. So when I have an order block like this, I want to see the market respect. I want to see price respect the level with candles closing either at or above the level. So all the way through here it was good, but right here after this candle closed here, that's a problem for me. But also the redeeming factor is that it is closing above the swing low there. So that's also interesting. Remember what this week is. It's NFP, FOMC. So price action is not always the cleanest. We're gonna wait and see if by 10:30 we have broken above this fair value gap. So far the order block is holding. So a close above it is good. How could I have known that this fair value gap would not be respected when price came back down to it? What is this? What time is this? So 5:45, 46, 48, 50. So that's the beginning of a macro. Ah, okay. So now the low is gone. I'm gonna watch and see how this candle closes. very tricky. If price does not close above this fair value gap and break this swing high, I'm not touching it. If I were interested in buying, those are the conditions I would be looking for. A break above this high and a return back down to this fair value gap. That's where I would be interested in buying. Let me see if I can use macros. I have an indicator that shows macros. 950, 950, 10, 10. So that's the beginning of the macro. Wow, I guess I was being too ambitious. Let's just return to this being a fair value gap. A little darker. Ooh, is that too black? Consequently, fortune. Okay, but Okay, it's 10:30 now, and it looks like we should go back to this being a fair value gap first before it becomes an inversion fair value gap. So why is it? Okay, so this is very bearish now, and should price, yeah, so it's following the roadmap that I outlined. If we break and close below this one, I may use it as an inversion fair value gap and try to get down to this level here. So that's what I'm watching for now. Not there yet. Uh, Price did close below consequent encroachment. That can be concerning. So this sell side liquidity also gone. It's the market maker sell model, brother. So now you can take a short position here as I expected it to become an inversion fairly gap. I think so. Since we formed a small swing low here and broke through that low, now I'm gonna watch and see if it is going to become an inversion fair value gap, in which case it will send us down to this low. So far, the inversion fair value gap is working, and it will draw to this level. This is an inversion fair value gap from Monday's trading. So I am gonna get rid of this order block. It's a very wicked consolidation over here. Don't know why it happened there, but it's not nice. Huh. No, I've been studying these data ranges. Find them interesting. Could actually come back to yesterday's opening gap. Let's get rid of this. So look at this range here and this other range. Move out the range for now. Okay, the chart is clear. Back out to the 5-minute chart. This is what it looks like. What say you? I see this, and this low. I don't think it should be there. We may draw it back down into this order block here, below this swing low, and then go back up higher. But for now, going from this low to that high, this will still be premium. And these relative equal lows here are concerning. So we'll see. On the 5-minute chart, this is our inversion fair value gap. Gotta remember that one. Okay. So there is something also that I noticed in price action. The areas where you have a down candle on the buy side of the curve, you're likely to get an up candle on the sell side of the curve. Even if the move is bound to continue lower, we may get an up close candle here if we're selling off. Note there is a fair value gap here. Also, uh, this gap is right there. That was an open range gap as well. Um, that's what happened yesterday. That there, consequent encouragement. They want me wondering what is this blue range? It is the PM session opening range, 1:30 to 2 p.m. Consequent encroachment of that range also proved important here. There's a lot of lines, so I'm gonna get rid of the macro stuff. Um, let's just say get rid of the lines. Looks a little better, huh? Okay, well, uh, this here, consequent encroachment. I don't like to have these lines in the chart anymore. Get rid of don't know, man. This is not convincing me that it is bullish because we're still in premium. It's a fair value gap right there. Yeah, in fact, I noticed that it's just better to trade time and price. Forget about these ranges. But I don't want to see it for now. Okay, this is key. I like it like this. Now I can note sell side liquidity. Actually, get rid of everything. One thing though, we want to keep. Uh, no, no is no. So there is a right time to use this order book after the macro. Time distortion. All the bullshit that happened overnight was time distortion. I don't like this. I will do this instead. Then here, as you can see, I'm also just still figuring out my stuff. This is better. That way, when price comes back here, I won't be entertaining any retail thoughts of support broken becomes resistance on this side. I think price can still go higher. Um, I'm just gonna note my PDAs as I see them like this. I find this wick interesting. There is a fair value gap here. Let's note that one. This could be an emergency. Could agree on that. this is a better way of showing, of annotating my charts. Let's take a look at Tesla. Okay, I think I'm going to stop the stream here. You can see that the beginning was a little hectic, chaotic, I would say, but we find finally, I think this is solid ground. This is something I can work with. Everything that happens overnight, that is time distortion, um, electronic trading. I don't want to trust that. I will just base all my decisions and my trading on uh, this RTH, right? So regular trading hours is what seems cleaner to me. And also I can see the price levels that actually matter, right? So like if we go back to ETH, you can see it is quite messy. Where is my chart? This is what we're looking at on ETH. Um, there is a lot. All of this is time distortion. So from here all the way to here, this is where the market opened. Nothing really, nothing important really happening. You can look at it like this. I mean, you can use it, or if you just want, you also don't have to use it. This is an inversion fair value gap that we saw here that we can use here on this side of the chart and sell short. And that inversion fair value gap is still visible on the regular trading hours. But um, this level here is the true day opening range. So if if you wanted, you could actually sell short here and target this level and this level and that level, right? So something like that. I guess that's it. It's good to just use the 5-minute chart and do your study. Look at these lows. Before the market opened, they were just engineering liquidity. Higher low, higher low. This low came below this low here. So that is, this would be considered as a long-term low, higher low, higher low. So for retail, it's bullish. But even for retail, I think I don't really understand. I haven't studied much about retail thinking outside of smart money concepts. I don't know anything else about the market. Everything I know is from ICT. So when you see price making higher lows and lower highs, right? None of these rallies, except for this one. So this rally here didn't create a higher high. This rally here did create a higher high, but it didn't reach this level. This rally failed completely to even reach this level. So what does that tell you? That the market is heavy. So when the market is heavy like this, it will seek fair value in the form of a fair value gap uh, down. So this sell stops, fair value gap, hit it, then rally. The thing that really threw me off is this, the timing of this order block, how to get in. Because when this candlestick closed here, I guess the low of the order block had not yet been broken. So it wasn't exactly an order block yet. But then we see a rally up to it. So I guess we can just consider 50% of that gap, you know, like there. So depending on how much uh, leverage you are using, if you sell at this order block open, you may not have enough money to cover all this move against you. So when you see an order block that is like this, it's better to just sell at the mean threshold of the order block. But even better is to wait for the end of the macro. Then every liquidity pool that you will see in here is stabilized. So it's like during this macro thing, this is my thinking, okay? And it's not from anyone else. I'm just thinking that, well, it, definitely from ICT, he said that during the opening range, from here to here, the market is, the dealer is shuffling. It's like the dealer is shuffling the cards. So nothing is stable. It's like you're holding a cup of water or some other material that you are shaking. And when it is shaking like that, it is very hard for anyone else to get in because you don't know where the level, what would be the level of the water in your cup when it settles, right? But when the water finally settles, you can clearly see uh, the levels, the different level, the levels of the water in the cup. Where is it settling? And then that level, you can trust it as that being the real volume uh, that's filled in the cup, right? So after that, after the opening range is closed, then any PDA that you see during the opening range will be valid. You can take it, but as price is moving, it's not be as reliable. It may not be as reliable as you might wish for. So that's one thing to always keep in mind. And with that, I'm going to end today's video here, and I'll see you again tomorrow.